How to invest in Bitcoin. Imagine waking up one morning to find out that your small Bitcoin investment has turned into a fortune. The stories of people becoming millionaires overnight are everywhere. But is it too late to invest in Bitcoin? Or is there still an opportunity waiting for you? If you've been wondering how to get started with Bitcoin and make smart investment choices, this video is for you. Stay with me until the end because I'll reveal a crucial mistake that could wipe out your investment if you're not careful. Before we dive in, take a second to hit that like button and subscribe for more expert insights on making money online and securing your financial future. Now, let's begin. What is Bitcoin and why is it valuable? Bitcoin is a decentralized digital currency that operates without a central bank or government control. Unlike traditional money, which can be printed at will, Bitcoin has a limited supply of only 21 million coins. This scarcity is what makes Bitcoin valuable. Think of it like digital gold, but even better because it's borderless, censorship-resistant, and easy to transfer globally. Many investors see Bitcoin as a hedge against inflation, a way to protect their wealth as governments continue printing money, devaluing traditional currencies. In fact, companies like Tesla and MicroStrategy have invested billions into Bitcoin, betting on its long-term value. But how do you invest in Bitcoin the right way? Let's break it down. Step 1. Understanding the different ways to invest in Bitcoin. There are several ways to invest in Bitcoin, and choosing the right one depends on your risk tolerance and investment goals. The first and most common way is to buy and hold Bitcoin, often called hodling. This means purchasing Bitcoin and keeping it in your wallet for months or years, expecting its value to rise over time. Many early adopters who bought Bitcoin years ago are now sitting on life-changing gains. The second way is trading Bitcoin, buying and selling frequently to take advantage of price fluctuations. This method requires skill and market analysis because Bitcoin's price is highly volatile. If you're not careful, you can lose money just as fast as you make it. The third option is Bitcoin mining, where you use powerful computers to solve complex mathematical problems and earn Bitcoin as a reward. However, mining requires expensive equipment and high electricity costs, making it less practical for beginners. Another way is through Bitcoin ETFs and stocks. Instead of buying Bitcoin directly, you can invest in companies that hold or work with Bitcoin. This method is ideal for those who want exposure to Bitcoin without dealing with wallets or security risks. Now that you know the different investment options, let's move on to the next crucial step: how to buy Bitcoin safely. Step 2. Choosing a secure and reliable exchange. To buy Bitcoin, you need a cryptocurrency exchange, a platform where you can trade regular money for Bitcoin. But not all exchanges are safe. Some have been hacked, leading to massive losses for investors. The most trusted exchanges include Binance, Coinbase, Kraken, and Gemini. These platforms offer security features like two-factor authentication and insurance against hacks. Always choose an exchange with a strong reputation and regulatory compliance. When signing up, you'll need to verify your identity by submitting an ID, as most exchanges follow Know Your Customer (KYC) regulations. Once verified, you can deposit money using your bank account, credit card, or even PayPal, depending on the exchange. Step 3. Storing your Bitcoin safely. After buying Bitcoin, where do you keep it? Leaving it on an exchange is risky because hackers often target these platforms. Instead, consider transferring your Bitcoin to a secure wallet. There are two types of wallets: hot wallets and cold wallets. Hot wallets are online and connected to the internet, making them convenient but more vulnerable to hacks. Examples include mobile and desktop wallets like Trust Wallet and MetaMask. Cold wallets, on the other hand, are offline storage devices, making them the safest option. These include hardware wallets like Ledger and Trezor, which store your Bitcoin securely away from hackers. If you're investing for the long term, a cold wallet is your best bet. Step 4. Strategies for investing wisely in Bitcoin. Investing in Bitcoin isn't just about buying randomly. Smart investors use different strategies to minimize risk and maximize profits. The first strategy is dollar cost averaging (DCA). This means investing a fixed amount of money into Bitcoin at regular intervals, weekly or monthly, regardless of the price. This approach helps reduce the impact of volatility and lowers your overall risk. Another strategy is buying the dip. Bitcoin's price fluctuates a lot, and there are moments when it drops significantly. Instead of panicking, smart investors see these dips as buying opportunities. You can also diversify by investing in other cryptocurrencies. While Bitcoin is the king of crypto, there are promising alternatives like Ethereum, Solana, and Cardano that offer unique advantages. However, altcoins are riskier, so do your research before investing. Step 5. Avoiding common Bitcoin investment mistakes. Many new investors make costly mistakes that could have been easily avoided. Let's go over some of the biggest pitfalls. One of the most dangerous mistakes is falling for scams. If someone promises guaranteed Bitcoin profits, it's a scam. Avoid Ponzi schemes, fake giveaways, and phishing emails asking for your private keys. Another common mistake is investing more than you can afford to lose. Bitcoin is highly volatile, and while it has the potential for massive gains, it also comes with risks. Never invest money you need for essential expenses. People also lose Bitcoin by forgetting their wallet passwords or private keys. Unlike banks, there's no recovery option for lost keys. If you lose access to your wallet, your Bitcoin is gone forever. Store your private keys in a safe place. Lastly, don't panic sell when the market drops. Bitcoin has had multiple crashes over the years, only to recover and reach new highs. Patience and long-term thinking are key to successful Bitcoin investing. Is Bitcoin a good investment? So, is investing in Bitcoin worth it? The answer depends on your financial goals and risk tolerance. Bitcoin has outperformed every asset class in the last decade, but it's also one of the most volatile. If you believe in its long-term potential and are willing to ride out the ups and downs, Bitcoin can be a powerful addition to your investment portfolio. But always do your own research, invest responsibly, and never put all your money into one asset. Now, I have a question for you. Do you think Bitcoin will continue to rise, or do you believe another cryptocurrency will take its place? Let me know your thoughts in the comments below. And if you found this video helpful, make sure to hit that like button and subscribe for more financial insights. See you in the next video.